setting audacious goals, learning from your mistakes, and getting better at trading. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing one of the principles that Ray Dalio talks about in his book Principles. So as I mentioned in a couple of the earlier videos, I was away for a few weeks. I went overseas, spent quite a bit of time on an airplane, 14-hour flight, 10-hour flight, flew through Dubai, spent time there, then flew into the States, spent time there with my parents and visited some friends, and then made the big trip back. So in the meantime, I had a lot of time to watch videos, listen to audiobooks, podcasts, make a lot of notes, review stuff, review trading charts, just go over things and trying to share some of the things that I was able to partake in when I was over in North America and some of the things that I picked up along the way. But one of the best things that I've been able to really share with you, I think we talk about failing forward, learning and focusing on constant progress. If you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. It's about creating the daily routines and rituals and habits that are going to be congruent with you getting the results that you want in your trading. One of the things that I've really been working on with my end-of-day trading model is not so much a holy grail method, but a robust strategy that allows me to trade a basket of currencies. I went through a lot of the turtle material, was able to really get a good grasp on their risk management approach in terms of how they were able to keep their risk even across the board, no matter which instrument they were trading, based on the volatility, position sizing, and for us as retail traders, one of the things that I'll go over in one of the other videos is also the currency conversion, to make sure that if you're taking a 1 hour loss, that it's the same across the board in terms of the dollar amount, because of the currency exchanges are different on every single pair that you're trading. So Ray Dalio, if you're not familiar with him, he runs Bridgewater Capital. He started that out of his apartment. He borrowed $4,000 from his father after losing money. Great book. If you haven't read it, I highly recommend it. It just reinforces Ray Dalio as he tells his story about how Bridgewater, if you're not familiar with them, they are the largest hedge fund in the world, or the largest investment fund in the world by quite a bit, bigger than the next funds combined. There are several billion under management, and he started that by himself. But one of the things that he talks about is learning. As he started off, he only had to manage himself, but as he got bigger, he had to learn how to manage people, as well as keep his business focused on growing and being really good at what they do. They now spend in excess of $100 million trying to figure out how to continue to get great returns from the markets. So he talks about setting audacious goals, setting really big goals. And then obviously there's a failure component to that. So they set goals. When I talked about switching to end-of-day trading, I was looking for certain parameters that I wanted to construct around my time of day, what I knew was available in terms of risk reward, but also along the way there's been a lot of mistakes. But from that I was able to gather a lot of learning principles. So I've talked about this in other videos. Even using micro lots, I think it's important to have skin in the game and to really focus on the fine details of not only all of the execution process of your trading plan, but the diary, the journaling, keeping stats, and really getting a firm grasp across the whole trading system of the challenges that you're going to come up against, not only in the trading, but also in your personal life and in the little details that may interfere with you actually executing your trading plan. So I'm a big proponent of end-of-day trading, and I'm not a big fan of day trading, primarily for a few reasons. I've talked about this in other videos. That's where a lot of the bulk of all my mistakes occurred, blowing up small trading accounts. But also in terms of the big picture, the likelihood of somebody able to be consistent day in and day out on short-term time frames in interpreting the data as it comes to you in a myriad of different ways every single day. The stats are there. 95%, I think it's 99% of day traders at some point will blow themselves up. End-of-day trading allows you to have a bit more high performance thinking. You've got a bit more time. I've been able to simplify my strategy, but because I can take multiple trades, I can still generate a reasonable return, and at the same time be able to manage my downside consistently. From that, the learning principles, there's improvement, and then again the cycle continues. Setting more goals. How can I get better at what I'm doing? And again, the whole process continues. You're going to make mistakes. You're going to learn from those mistakes. You're going to find improvement, hopefully, if you're focused on constant progress, and then you can set new goals. So I talked about, I've really narrowed it down to 1 or 2 simple strategies. The 90% of my trades are all trend trades. There's a couple of counter trend trades that I do use, but they're very straightforward, and it's indicative that the trend has ended when I let the market pick me up. I use limit orders. But again, even with my risk, I've made all of the currencies in terms of my position sizing and the currency exchange on that instrument the same size risk. So if I take a 1-hour loss on trading the New Zealand dollar, it's the same as a 1-hour loss on the US yen. So no matter how I'm, if I have an positive expectancy of 1.7 or 2.4 and I've got a 1R, it's 1R is the same. If my average positive expectancy is 1.7, it's the same across the board once that conversion takes place. So there's little things along the way that no matter what time frame you're trading, no matter what you're doing, if you can set goals, make mistakes, if you're just learning, or if you're trying something new, use the smallest lot size possible, or use your demo account if you're disciplined enough to treat it the same as you would with a live account. Learn from that. Keep detailed journals. Again, peel the onion skin back. For me, it's not about what could I do better. It was what could I eliminate out that was interfering with me achieving the highest performing results. And so again, I've nailed that back down to 2 simple really trading setups that I look for. Now the hard part sometimes can be managing yourself, being patient, waiting for those great trades. So there may be, on some pairs, there may be a couple of weeks where there's no clear-cut, simple trade setups. But when the trade setup shows up, it can be worth a whole month of pips just on one trade. So again, just to review, set audacious goals. You're going to encounter failures. You need to learn from those mistakes. And you need to, from those mistakes, keep improving and focus on constant progress, and then start the cycle again, set goals and get better. So again, the 7-step daily routine, we want to accelerate learning, we want to be setting goals, we want to be journaling, we want to be focused on constant progress, reviewing that at the end of the week. What did I do well? What could I have done better? So for a lot of traders, I know over 50% of traders don't even follow their trading plan. So in the quiet times when the markets are shut, traders set up their plan, they'll do all this work, they'll map out their risk management, they've got a plan for the week, the market starts up live, and they completely abandon that. And I know I've done that myself. So, in order for us to succeed long term, I talk about this, I talk about going to longer time frames, but I talk about keeping your risk really small, keep getting better, stay focused on constant progress, and keep things really simple. So hopefully you got some value from today's video. Ray Dalio Principles book, if you haven't got it or if you haven't read it, I like the audio books because I can take them everywhere. I'm always listening to stuff when I'm out with the dogs at the beach, on the plane, at the park, out running, whatever. But stay focused on constant progress, keep learning, keep improving, don't be afraid to fail. So like Jerry Parker from the Turtles said, just do the right thing. Take the trades, learn from them, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.